Glad to have you here today because we have to talk about something that just happened short time ago. The Federal Reserve today hiked interest rates by another 1/4 percentage point. So Mike, why is the Fed hiking rates again after we know they took a break earlier this summer?
Yeah, it seems very confusing. Rates are now as high as they've been in 22 years. They've raised over 5 percentage points over the last year. Basically, what they're trying to do, and we've talked about this before, they're trying to find the exit route. And you know when you're driving down the highway and you see the cars starting to slow, and you're like, if they're going somewhat slow, I'll stay on this road. But if it's a complete standstill, then I'm getting off. So the Fed's trying to watch the economy as it's driving down the road, and if they think the economy is just slowing up perfectly, then they'll keep going. If they're like, we've crashed the economy, we got to hit the exit. And right now they're feeling like we need to keep going. We don't see enough slowness to stop.
Okay, so are these rate hikes that we have seen having their intended impacts of slowing the economy?
Yeah, it's really debatable. It depends on what you're looking at. One of the best questions that the Federal Reserve Chairman Jerome Powell took today was a reporter asking him, Barbie was a blowout success this weekend. People are going to Taylor Swift concerts, spending all kinds of ungodly money. It seems like the discretionary spending is still there. Are we slowing the economy? And so it's a real question as to that. You're seeing, the housing market took a little bit of a dip nationwide, but it seems like it's reaccelerating again. Companies have done very well. Corporate profits, they're continuing to hold up better than people expected. So it's hard to see. The economy seems to be slowing, but not drastically yet.
So how should then we take all of that in and think about our investments given the as you say, the fog that is still hovering around?
Well, I think the key is to realize that fog is just a part of life in general, right? I mean, there's always a lot of uncertainty out there, and markets like to climb this wall of worry. So if you don't have that wall of worry, then it means probably everybody's already in, and it's harder for the markets to move higher. So the first thing to think about is just this is commonplace, this is normal, this is what you should expect. Second thing is, it's amazing how good capitalism is. It's got its faults, but in terms of allocating resources, it's very, very good. And corporations are really good at being able to navigate, and they're very resilient at operating in different situations. And so they've been able to hold up much better than people expected.
So the main message here then is just to keep our eyes focused down the road, right?
Yes, this is like driver's ed 101. I'm looking down, in my maps or whatever, and they're like, the instructor's like, look down the path. I finally realized that I failed my first driver's test, but I finally picked up on it. So I learned. It's the same thing here. If you're driving down the highway and you're looking at all the billboards, it's saying buy this, don't buy this, do this, don't do this, right? It can be tons of noise.
Yes.
If you look further down the road, you start to, you can stay on the path better. And it's the same thing here. If you hear recession, soft landing, get out, all in, it can be very, very jarring as an investor. So the better thing to do is just look down the road, and long term, generally, historically, things have been good. And so if you do that, it gives your whole life experience better. Get some good music on and kind of enjoy the investing ride.
Maybe some Taylor Swift.
Some Taylor Swift, especially for you. What's your favorite song?
My girls love Shake It Off.
Okay.
Who doesn't?
Who doesn't?
And that's what we're going to leave this on.
There we go.
Shake It Off.
Okay, we'll shake it off.
Mike, thank you so
bet.
much. We'll be right back.